One of the reasons the anti-establishment vote will continue is they refuse to take responsibility for anything. Look at the Republicans in the U.S. Donald Trump arrives. They still don't get that they're part of the problem. We watched the markets in tremendous turmoil yesterday. How could we be surprised? The International Institute of Finance stated last week that Brexit would be a bigger threat to the global economy than Lehman's collapse. Really? Next up, British Prime Minister David Cameron said that it would lead to world war. Not to be outdone, EU President Donald Tusk stated that a vote to leave the EU could spell the end of Western political civilization itself. And they're surprised there's a reaction in the market? The Leave side won. Get over it. Talking with Tyler Bollhorn here. Looking forward to getting Jack Crooks with me in just a couple of minutes. But Tyler, just before the break, you were chatting about the overreaction you saw in the markets on Friday. I just gave you a few reasons why, when that's the leadership we're getting. And you mentioned that, okay, so how are you going to look to play it in the short term? And you were talking about XIV, the ETF. Can you elaborate a bit more?
So this is an ETF that basically goes up with the market going up and goes down with the market going down. It is the inverse of the VXX, which is another thing that I will trade. So anytime there's turmoil in the market, I love to trade these things because they move very quickly, lots of volatility, and it's a way to take advantage of emotion in the market. So on Monday, I think the emotion is overdone. I think we will probably get a weak open on Monday, and then sometime Monday, maybe Tuesday, we'll get a bounce back. And so I will buy the XIV to take advantage of that. However, I got to wait for the bounce to start to happen because we're trying to catch a falling knife, and that, of course, is a difficult thing to do. So short term, I think the emotion will come out of the market, but looking out longer term, I think you can actually trade it from the other side as well.
So looking out longer term, you'll say, okay, we've had the drop now, you're looking for a bounce, and then you would look to, again, you're allowed to use your technical indicators, but let's say you're guessing going further, then you'll get the decline again.
Yes, exactly. I think we do have damage to confidence in the market. So, the initial reaction overdone, you'll get a bounce back from that. But the reality is the fundamentals have changed for the market. We're going into the summer when there tends to be a slowdown in trading action. And you also have third quarter earnings, which tend to be weaker than any other quarter. I think this one could be even worse. You've got slowing employment numbers out of the U.S. So there's a lot of reasons why I think we could get more of a pullback. So in the next 5 days, play the bounce, but in the next 5 weeks, look for more weakness.
And again, just very quickly, it seems to me the shorter term trade is for people who are traders, and the longer term, as you say, is someone who's more, can I just say it, investment oriented.
Yeah, to play that bounce, I think you have to be able to watch the market very closely. I sit in front of a screen all day. It's a trade that I can do. It's not really realistic for someone who's not going to monitor the market closely. That longer term trade where you're actually going to buy the inverse, the VXX, so that goes up when the market goes down, that is one that people can actually do inside their RSP. There is a Canadian version of that. The symbol is HVU on the Toronto Exchange. So that is something you can trade longer term to take advantage of market weakness. It's one of the great ways to profit from a market going down.
Tyler, thanks so much for finding time for us. You can find more with Tyler at stockscores.com, stockscores.com. Many thanks, Tyler.
Great to be with you.